first entry that I want to discuss with you is bank account debit to bank loan. When we talk about bank account debit to bank loan, bank will be categorized under which category? Whether it's an asset, expense, income, liability, or capital. In which category bank will come?
It's an asset, sir.
It's an asset. So my asset is increasing or decreasing?
Increasing.
Okay. So there are two decisions we have made. First is bank comes under which category? That is the first logical thinking that we did. The second thing that we understood is whether it is increasing or decreasing, right? Okay. So first, when I decided that it's an asset, and when asset is increasing, what we shall do? When asset is increasing, what we shall do?
Debit.
Debit it. So that is the reason why bank is debited. Okay. And bank loan credited. Bank loan will come under which category? Someone told it's a capital. Is it a capital? Or in fact, bank, someone told it's a capital. Bank loan will come under which category? Liability, income, capital, asset, or expenses? Which category?
Liability.
Liability. When I take a loan from a bank, my liability will increase or decrease?
Increase.
Increase. So my liability will increase. What I shall do? What is the rule that I told?
Credit.
Increase in liability should be credited. This is how we have to think of an entry from today onwards. In fact, not from today, from the first session that I took actually. Clear? Every entry that you see going forward, just think the logic behind that entry, and the two rules that I told you will never go wrong in your life. Take any book, any company, any country. I cannot tell beyond that. Fine. Any book, whether a CA final book or a CA inter book or a CA foundation book or 11th book, 12th book, BCom book, MCom book, any book you take, these rules are going to remain the same. Am I clear? So whenever you see an entry, think about this and you will never go wrong in life. And this is the building of the foundation. Okay. And once you are having a hold on this, all the chapters will start looking easy. See, my objective during our discussion is not only to make you understand the chapter. That will eventually happen. The first and foremost thing for me is to make you understand the concept actually. And by doing that, what I am trying to build is I am trying to create a love for this subject actually. So see, I always tell my student actually, what is more important for me is you should start loving the subject. By end of 3.5 months, you should tell that accounts is my favorite subject, or this is what you love actually. That is a kind of inclination that you should have towards the subject. Clear? So focus on accounts like a concept or an understanding. From today onwards, if someone is still of the opinion that they can mug up the entries, you are not at the right place. Because here, there is absolutely 0% scope of mucking up entries. Every entry that we see, we are going to learn, we are going to understand that. And you'll start enjoying this exercise. So today I'm going to discuss about issue of shares. Again, the topic is going to be highly concept-based. Okay. So first we will understand what is an equity share. What is share capital? What is equity shares? You would have heard about this word many a times, right? Shares. What do you understand by the word share actually? Anyone? Anyone?
Sir, I'm Shunish here, sir.
Sorry?
I'm Shunish here, sir.
Yeah. Tell me, go ahead.
About shares, I have an opinion about shares. Is, it's ownership of a small ownership. Sir, can I talk in Tamil, sir?
Any language is fine. I can understand Tamil, English, Hindi, and Malayalam.
Okay, sir.
ஒரு
ஓனர்ஷிப் நம்மளுக்கு கிடைக்குதுன்னா அதோட amount of ownership and shareholders, sir. They are called as shareholders. இப்போ நம்ம எவ்வளவு ஷேர் வாங்குறோமோ அவ்வளோ it's a value of the company, sir.
Okay. Sivanesh, what are you studying actually?
11th, sir.
11th. Absolutely impressive. In fact, I have never seen 11th student telling the definition of a share more clearly and more precisely. Fantastic and absolutely perfect in the way you defined share. Actually, I'm actually very impressed that you're in 11th. I thought you must be in college or something. Okay, so fantastic, very good start. This is why participation is important. I don't encourage right or wrong. Everything is equally good for me. A wrong answer also gives a student a perspective or the faculty a perspective. A wrong answer also, but this was absolutely brilliant actually. See, when we talk about shares is nothing but, okay, to bring into context, we are going to discuss about company now. Okay, we are going to discuss issue of share capital is all about a company. We are not going to discuss about partnership. We are not going to discuss about proprietorship. We are going to discuss about company. Only a company can issue shares. That is point number one. Okay, so if today I purchase the share of Reliance or Infosys or Tata, 3 IT companies, I will be called as a shareholder. I will be called as a shareholder of the company. And I will have, assuming I purchase 1 share of Infosys, I am having 1 share of Infosys. What does this mean to me? I am the shareholder of Infosys and I am contributing to the capital of Infosys to the extent of 1 share. I become the owner of Infosys, in other words. I become the owner of Infosys to the extent of 1 share of the company. See, I cannot go sit next to Narayan Murthy and tell him that, boss, I am the owner of the company. I am having 1 share of your company. Factually, that is true. I am the owner of the company to the extent of 1 share. But 1 share is too small a holding for me to say anything. If I am 51% shareholder, I can just put my hand around his neck and tell, boss, I am a 51% shareholder in your company and your company is my company. Okay. Even a single shareholder is also an owner of the company, right? To the extent of 1 share of the company. So that means he has a right in the company to the extent of 1 share of the company, right? Brilliant, Sevanesh. So shareholders are the owners of the company, right? So here what we are going to discuss is accounting, how to account the treatment of issue of share capital. When the company is going to issue share capital to the public, what is the accounting treatment is what we are going to learn in this chapter. Okay, so we will be discussing only from the company point of view. The whole topic will not be anything from the shareholder perspective. If a company is going to issue shares, what are the entries that we are going to pass in the books of the company? That is what we are going to discuss in the company. Okay. See, when the company wants to start a business, there are various methods of funding the business. One of the best way of funding the business is equity share capital. Right? They can give shares to the public, they can issue shares to the public, and they can ask money from the public. This is the beautiful way of funding. Why it is the best way of funding? Because it will bring cash into the company, point number one. And when this cash is coming into the company, there is no obligation for the company to pay to the shareholders. As it, the shareholders cannot demand, I have invested in your company, say 1 lakh rupees, you have to give me dividend. The shareholders cannot demand dividend from the company. The company can pay. The company at its own discretion can pay to the shareholders. If the company thinks it has to pay, it can pay. But there is no mandatory law which tells that the company has made a profit and they have to pay dividend. It is only up to the discretion of the company. The company will tell the shareholders, boss, I am not going to pay you dividend. I will use this money to open another company. Instead of, I will use this money to open another company. Ultimately, you will also benefit. You are my shareholder, right? If I open another company under this, my own company, or if I expand another unit, if I open a unit in Delhi, apart from Tamil Nadu, then the business is expanding, right? So it's not important for the company to pay dividend to the shareholders. That is point number one. There is no obligation attached to shares. Point number one. That is why it is one of the beautiful source of funding. Second, there is no need for the company to make a repayment to the shareholders during the lifetime of the company. Okay. During the lifetime of the company, there is no need for the company to repay the amount. the company will have to repay the amount only at the time of winding up of the company, and that too, if at all any money is left actually. Shareholders will be the last person to receive money. See, when the company is going to be winded up means the company is going to close actually. The shareholders will be the last person in the queue. If at all there is something left, they will get amount, otherwise they will not get anything. Right? So first, I'm not going to discuss about, in fact, they can be asked to contribute also. Shareholders. They can, if the company has, okay, I will discuss about that maybe at a later point of time. So first, why it is called as the best source of financing is, first, there is no obligation to pay. Shareholders cannot demand dividend. They can ask, boss, this year you made a profit, right? They can ask the company, this year you made a profit, please declare dividend. They can only request the company. Whether the company should take the request or not, it is up to the company. Right? That means there is no obligation on the company to pay dividend. Second, there is no time limit for repayment of share capital. After 5 years, after 10 years, after 1 year, no. If the shareholders wants to take the money out of the company, he can find another shareholder and he can sell their shares. He cannot ask the company to pay them back. Right? If I am a shareholder, I don't want to invest in this company anymore. What I can do is I can sell my shares to some other company in my stock exchange. I can go to, if my shares are listed in stock exchange, National Stock Exchange or Bombay Stock Exchange, I can find another shareholder and sell the shares to them. Okay, but they cannot ask the company to repay them. Am I clear? Shareholders may keep changing. Today it is Prasad, tomorrow it can be Prasanna, day after tomorrow it can be Deepa. The same share can switch hands from one person to another person. But the capital of the company will remain intact. Shareholders may come and go. Am I clear? Okay, that is the beauty of equity share capital. And they are also the owners of the company. That means they have a stake in the company to the extent of the capital contributed by them. And it also gives them voting rights. See, there are certain decisions in the company which requires approval from the shareholders. Okay, you will learn more about it in the Companies Act when you progress in your CA Inter or CMA Inter. I'm not going to discuss in detail, neither I'm an expert in company law. I'm not going to discuss in detail. There are certain decisions in the company which can only be taken by the approval of the shareholders. Right? Like at least 50% of the shareholders should vote, then only a certain decision can be passed. Or there is something called special resolution. In case of a special resolution, 75% of the shareholders should vote in favor of the resolution. Then only that resolution can be passed. Then only that decisions can be taken. Okay? Am I clear? So there are some resolutions which can be passed by ordinary majority. There are some resolutions which can be passed by special majority. We call those resolutions as special resolutions. And which can be passed by ordinary majority, those resolutions are called ordinary resolutions. So as a shareholder, if there is a decision, for example, increase in managing director salary, there is a resolution in the board, in the shareholders meeting to increase the remuneration of the managing director. Assuming it is an ordinary resolution, I am a shareholder, I have one share, I can vote, I can exercise my vote for that one share. Right? So my one share will also make a difference actually to either pass the special resolution or the ordinary resolution. Am I clear? So that is the power that shareholder have actually. Okay. So I'm not going to discuss in detail about the Companies Act aspect of it. Okay. Here we will be only talking about accounting aspect of it. So I just gave you a broad line on what is shares, what is share capital. Okay. So now I will discuss about, so you are clear on shares actually. Shareholders are like owners of the company. There is no obligation for the company to pay back to the shareholders. The company can pay, in case the company is making good profit, they can pay it to the shareholders in the form of dividend actually. The shareholders will be happy receiving their dividend, but they cannot force the company to pay dividend. Okay, there is no time payment for repayment of the capital. So that is why it is one of the best source of financing. If I take a loan from the bank, right, the bank will give me loan for 5 years and 10 years, and they will ask interest also. So there is a commitment. When I raise a loan, I have a commitment of payment of interest. I have a commitment to repay the loan after a certain point of time. I cannot tell the bank, boss, you have given me loan, now forget it. Only Vijay Mallya can tell that, not everyone. Fine. Am I clear? So there is, if I take a loan, we have to repay it, right? So there is an obligation to repay, and there is an obligation to pay interest also on such loans. Am I clear, guys? So that is the difference between shares and debentures. Actually, debentures has a fixed commitment in terms of interest, and debentures, in fact, debenture is the next chapter that we are going to learn. Debentures are nothing but like a bank loan. Very simple. It's like a bank loan. I invite money from the public, and that money will be treated as a liability. Actually, it will be a long-term liability. So debenture, in other words, is nothing but a liability that the company is taking from the public. Instead of going to the bank, they are taking from the public. That is the only difference. Otherwise, everything is same between a bank loan and a debenture. Am I clear? Okay. So this is a technical difference between a shares, debenture, and a bank loan. Any doubt so far? Any doubt, guys? No?
No, sir.
Okay. Let us discuss now into the technical aspect of the chapter. Let me open my screen and share it with you guys. Give me a moment. Let me find out the. Stop me at any point of time, guys. I'm happy to take any questions. Let me share my screen with all of you. Okay. For those who are in school, those who are attending, and those who are either in 11th or 12th, this chapter will be part of your 12th syllabus, whether it's a state board or a CBSE board. What we are discussing is now is going to be part of your 12th standard syllabus, both in state board and CBSE. Those who are pursuing their college, they would have already learned in their 11th and 12th. And in college, maybe in the first year, second year, third year, you will again come across this topic, either in any of the years actually. Okay. So we are going to discuss about equity shares. Very interesting concept, very important concept as well. You will be living with this concept. See, everyone at some point of time, either we have to do our practice or we have to associate it with a company actually. Right. So if we are in a company, definitely there will be a share capital in the company. If you are an auditor of a company, definitely there will be we have to audit the share capital of that company. So in either ways, it will, this topic is going to be with us actually for a longer time. But it's not every time the company issues share capital, but still very interesting topic to know. So share capital. Generally, whenever we talk about shares, right, face value, we call something as face value. Face value of a share is 10 rupees. Generally, in all my discussions that I will be discussing, I will be using this term face value or nominal value. We call this as nominal value also. Nominal value of a share will always be 10. So if the company, if the company has a share with a face value of 10 rupees, see today if I want to buy Infosys share, in market, the shares are getting traded at 1,200 or 1,300. Okay. If Infosys want to issue additional shares today, will they issue at 10 rupees or will they issue at a higher amount? Anyone?
At a higher amount, sir.
Yes, they may issue close to the market value, right? Today, the shares in the market are being traded at 1200 or 1300 rupees actually. So they may issue the shares, for example, say at 1000 rupees. So 10 rupees will be the face value. 990 rupees will be the premium on that shares. Okay, 990 rupees. See, I'm not talking about the market value. I'm talking about the issue price. See, I can issue at 1000 rupees. Tomorrow it can become 1200 immediately. Next day it can become 1500, and after 1 month it can become 200 also. So market price can keep on fluctuating, and we don't do the accounting based on market price. None of the accounting is done based on market valuations. We only do the accounting based on the book valuations. Clear? So for you, forget about the market value and all those concepts. Just remember the face value of a share will always be 10 rupees. For academic purposes, we can issue this share at 12 rupees. 12 rupees means it will be called as premium. We can issue this share at 8 rupees also. If I issue at 8 rupees, it will be called as discount. That will be a later discussion. After maybe 3 to 4 classes, I will be discussing what will be the accounting entry when shares are issued at discount, what will be the accounting entry when shares are issued at premium. Maybe after in the 3rd class or 4th class, I will discuss that. Okay, today I'm not discussing that. So for now, just remember, a face value of the share is always 10 rupees. Clear? Now, the company can call this 10 rupees in multiple calls. Okay, before that, I will introduce a concept called types of share capital. Types of share capital. There are various types of share capital that we have to present in our balance sheet. If you take the balance sheet of a company, see, the balance sheet of a company is as per the Companies Act. When you did your 11th standard, you would have done final account of sole proprietorship. In final account of sole proprietorship, there is no format. You can put cash at the top, you can put debtors in the bottom, you can put fixed assets at some place, you can put building at some place, you can put loan at some place, you can put liability at some place. But whenever we talk about Companies Act 2013, Schedule 3 of the Companies Act 2013 has given a format for the company to present its balance sheet. No company can deviate from that format. If you take the balance sheet of any company, all the company's format of balance sheet will be same. Okay. So when we talk about the first item, I will just give you a broader level of the balance sheet. The first item in the liability side of a company's balance sheet is called as equity and liabilities. Okay. In equity and liabilities, the first item is shareholders fund. The first item under equity and liabilities will be shareholders fund. Inside shareholders fund, there are subdivisions. The first item will be share capital, and the second item will be reserves and surplus. Okay. So in case of a company, the balance sheet will look like, and company do not maintain a horizontal format of balance sheet. See, in case of a sole proprietorship, you would have seen balance sheet like this: liabilities, amount, capital, amount. This is the balance sheet format for a sole proprietorship. The company does not follow this format. And you can place anything anywhere. You can put building at top, you can put plant and machinery at bottom, you can put bank somewhere. There is no format for a sole proprietorship. You just have to put asset in asset side, liability in liability side, and capital in the liability side. That's it. That is the only format that we have to follow. Clear? But in case of a company, we can't follow this format in case of a company. Okay, the balance sheet of a company, you don't have to get into the details of the balance sheet. I'm just giving a very, very, very high level view of what is the balance sheet. You don't have to worry about at this stage. In company's balance sheet, there are two categories. One is called as equity and liabilities. This we call as the type. This is the liability side, which is called equity and liabilities. And then we have asset side. Asset is assets. And we don't follow a horizontal format, we follow a vertical format in the balance sheet. Under equity and liabilities, there are subcategories. The first category is shareholders fund. Shareholders fund. Inside shareholders fund, there are two subcategories. What are the two subcategories? One is share capital, another is reserves and surplus. So today's discussion is only on this category. What we are going to discuss is only the share capital part of it. Okay. Inside shareholders fund, this is the main heading. I will color the main heading. Don't like this color. Yellow. Okay. Shareholders fund. Okay. Shareholders fund. Then we have non-current liabilities. Three major headings. Three major headings is shareholders fund, non-current liabilities, and current liabilities. You don't have to write it down, guys. For now, I'm just giving and this will become my total of equity and liabilities. The main heading is total of equity and liabilities. Inside that we have first share capital, second non-current liability, third current liability. There is one more thing called share application pending allotment. Okay, I will mention that also. Share application pending allotment. This is heading number 2. This is heading number 3, and this is 4. These are the 4 items that comes in the liability side of a company. We will get what total of equity and liabilities. This will be total of equity and liabilities. In asset side, we have only 2 categories. One is non-current assets, and another is current assets. So in balance sheet, always the total of assets and liabilities should match. This will become my total of assets. Total of, this is the balance sheet of a company. So assuming I have 30 rupees of capital amount, 300, reserves and surpluses 200, application pending allotment I don't have, nil, current non-current liabilities, say example 50, and this is I will make it as 60. My current liabilities is 40. So my total of balance sheet is 600. Total of liability side is 600. In assets, I have non-current assets, for example, 400, and current assets of 200. This is my balance sheet of a company. This is the format of balance sheet of a company. Okay. So I'm not going to discuss about all these portions now. I'm going to discuss about only the first category. Inside the first category, the first subheading, share capital. This is the point of discussion in this chapter. Okay. Shareholders fund. We are only going to discuss the first topic, which is share capital. We are not going to discuss any of the other things, but this is how the balance sheet of a company looks like. Take any balance sheet, just Google balance sheet of Infosys. You will find the same format. You may not understand this at this point of time, but if you see, the format will be more or less the same. Clear? Okay. So what we are going to discuss is this share capital. Inside share capital, there is something called note number. Here, note number. What is note number? Note number will give me the detail. Everything will have a note number. Okay. So what will this note number tell? Inside share capital, it will give me the breakup. If I go to note number 1, share capital, it will tell me how many shares I am having. Okay, what is the nature of shares, whether it is an equity share or whether it's a preference share, how many numbers of shares. So the details will be there in the note actually. See, I cannot put everything on the face of the balance sheet, right? If I put everything in the face of the balance sheet, my balance sheet will become 10 or 20 pages. I should have a balance sheet in single page actually. So the details of that balance sheet is given in note, in the form of notes. Clear? So if I go to note number 1, I will get the details. So share capital, note number 1, share capital, I'm going to discuss this today. So share capital, note number 1. If I see note number 1, share capital, what are the types of share capital the company will have? The company has various types of share capital. Let me, first is authorized capital. I will explain to you what is it. Authorized, then issued capital, then subscribed capital, then called up capital, then paid up. authorized, issued, subscribed, called up, and paid up capital. Let me explain to you one by one. Okay. In your 12th standard, you would have read Memorandum of Association of a company. Have you heard this word Memorandum of Association, Article of Association? Okay, you would not have read. Okay, I think the CBSE 12th guys would have read that. I'm not sure about whether it is part of the state board. It should be as part of your commerce subject. Nevertheless, let me explain to you. When we go to start a company, right, we have to take some permission. The permission has to be taken from, or we have to take a license. I see most of the cameras off. Okay, it will be good to have the cameras on, guys, so that we can have some interaction also. So whenever we have to start a company, see, today I cannot start a company. I cannot start a company without a permission. Someone has to give me a permission to start a company, right? That authority who has to give a permission, that is called as Registrar of Companies. That is called as Registrar of Companies. So I have to approach Registrar of Companies to give me permission to start a company. Okay, so there are various documents which are filed to get permission. One such document is called Articles of Association. In other words, they are called bylaws of the companies also. And another important document is Memorandum of Association of the company. In Memorandum of Association of the companies, there are various clauses of the company, like name clause. What should be the name of the company is supposed to do? They have to define in the objective. They cannot do anything which is not given in the objective. It will become illegal. Okay, it will become not illegal. It will become ultra vires. We call it as ultra vires. That means it is not allowed by the Registrar of Companies. If they tell in the objective clause that if Igniting Minds starts a company tomorrow, and they tell in the objective clause that their objective is to take classes, then tomorrow we cannot start developing a software, or we can do in relation to the classes. Okay, we cannot start a dance academy, or we cannot do anything which is not given in the objective clause actually. So objective clause is something which defines what the company is supposed to do actually. Similarly, there is a clause called capital clause. Okay, what is the capital clause will tell? This is the maximum permission that we have got from the Registrar of Companies to raise capital. If tomorrow you start a company, you will have a requirement of capital in mind, right? That for my company, I want 1 crore capital, or 10 lakhs capital, or 20 lakhs capital, or 50 lakhs capital. So you will, in the objective clause, you will mention your authorized capital. Your authorized capital as 1 crore. And you take permission from the ROC that up to 1 crore, you should not ask me any questions. Okay, I have a limit sanctioned 1 crore. Up to 1 crore, there should not be any question asked to me actually. So authorized capital is the maximum capital that the company can raise, which is sanctioned by the ROC, which is authorized by the Registrar of Companies in their objective clause inside the Memorandum of Association. Sorry, in the capital clause in the Memorandum of Association. Okay, so Memorandum of Association is the starting document, or we call it as incorporation document. That is the basic document of any company. In the basic document of any company, you will find how much it has been authorized by Registrar of Companies to raise capital. If I have been given permission of 1 crore, I cannot raise 1 crore 10 lakh from the public. I can only raise maximum of 1 crore. If I have a requirement of 1 crore 10 lakh, I have to again get additional permission from ROC. I have to amend the Memorandum of Association by making an application to ROC again. I have to tell them, boss, my company is growing. 1 crore is not sufficient for me. Please increase my limit to 1 crore 10 lakh. I have to amend the Memorandum of Association, the capital clause inside that. Then only I can raise 1 crore 10 lakhs. Otherwise, I cannot raise. Okay. In other words, forget about changing or amending the Memorandum of Association. Let us talk about the normal things. Okay. So in short, if I want to tell what is authorized capital is the maximum limit the company can raise, maximum capital the company can raise. Am I clear? Okay. So how the authorized capital will look like? authorized capital, assuming authorized capital is 1 lakh equity shares at the rate of 10 each. 1 lakh shares at the rate of 10 each. How much will be my capital, guys? 10 lakhs. Okay. So 10 lakh is the maximum capital that I can raise from the public. But today I don't have a requirement of 10 lakh. I'm a startup. I don't want 10 lakh today. For me, 1 lakh is enough today. Tomorrow or after 6 months, if I want additional capital, I will raise. Okay. So out of 10 lakh, I decide to raise only 4 lakh from the public. Okay. So how many shares I have to issue? I have a limit of 1 lakh equity shares. But if I want only 4 lakh capital, then how many shares I have to issue?
40,000
shares at the rate of 10. It will be 4 lakh. This is my dream to get 4 lakh. But if I start a company and I start issuing shares to the public, will the company subscribe to my shares? They don't know. They don't know Prasad, right? Or they don't know, in case Prasanna or Sivanesh, if tomorrow you start a company, people may not know us actually. We are only starting now, right? So it's not necessary that the entire 4 lakh will be subscribed by the public, right? If I am Infosys, if I issue 4 lakh shares, applications will come for 40 lakh shares. 100 times more applications will come. Everyone knows about Infosys as a company, or Infosys as a brand, or TCS as a brand, or Tata as a brand actually. Clear? So if they issue 4 lakh shares, they may get 40 lakhs application also. But if a small shop nearby, if they want to start a company, imagine a small shop in your neighborhood. If they want to raise a capital, they may not get that response, same response, right? So yes, I want to issue 40,000 shares, but I don't have that much of public subscribing to my shares actually. So subscribed capital is, but as per the Companies Act, an IPO is only successful if 90% of the shares are subscribed. If it is not subscribed, then they have to again redo the entire process. Okay, subscribed capital is assuming 30,000 shares at the rate of 10 each. Ideally, it should be 90%. Without 90%, an issue cannot go through as per the Companies Act. Minimum 90% is required for the issue to be successful, to raise capital, right? Assuming it is 30,000 shares, so 30,000 shares into 10 each. This is the subscribed capital. Clear? Subscribed capital is how much public are interested in my shares. If they give me 5 lakh applications, I gave only 40,000 shares. If I, how many shares I gave? I issued only 40,000 shares. If I get application for 70,000 shares, I cannot issue 70,000 because my issue itself was 40,000, right? I will have to choose which 40,000 shareholders I have to give. That is a topic which will come later as we discuss in the chapter. A pro rata allotment, very interesting topic. Pro rata allotment, and it is considered to be one of the most toughest topic across all levels actually. I will make it as simple as possible for you guys. You will start loving that topic. Okay. So so subscribed capital is out of 40,000 issued capital, how many shares are being subscribed? That is called subscribed capital. Clear? Now, when we talk about shares, we don't call the entire 10 rupees at once. Okay, we have different stages. What are the different stages? If I want to raise 10 rupees, I won't raise at once. I will tell boss, if you want to apply for your college, right? What you will do, you will file an application. The college will tell 1,000 rupees for application. The fees of the college may be, assuming it is 1 lakh rupees. You don't pay the entire 1 lakh rupees at once, right? You pay 1,000 rupees on application. Then during first semester, they ask you to pay 20,000 rupees. Second semester, they ask you to pay another 25,000. Third semester, they ask you to pay, by the end of 6th semester of your 3 years, you pay the entire amount. Clear? Similarly, in case of shares also, we don't call the entire 10 rupees at once. We tell that, boss, if you want to apply for the shares of my company, give 2 rupees on application. Every company can change. Actually, some can call 3 rupees, 5 rupees. I'm just giving examples. Okay. So we will call 2 rupees on application. Then the next stage is allotment. It's not necessary, right? The moment you apply, I have allotted. It's not necessary, right? I am issuing only 40,000 shares. If I get application for 70,000 shares, can I give application to everyone, allotment to everyone? I cannot give, right? So allotment, I will call only to the successful applicants, right? So I will tell boss, you give 2 rupees on application. You give me 3 rupees. Once the shares are allotted to you, you give me 3 rupees. Total is 5 rupees so far. I still have to call another 5 rupees. Then I will give you 2 more installments. First call, second and final call. The company can decide the split. Okay, 3 rupees, 2 rupees. The total becomes 10 rupees. So this value is called, we call it as face value or nominal value. The company will call the amount in multiple calls actually. Some amount with application, some amount when they are allotting the shares to the shareholder. Then during first call, they will call some amount, and during final call, they will call some amount. They can have 4 calls or 3 calls or 5 calls depending on the company. They can split that amount actually, how they want it actually. Clear? They can, the first call they can make after 2 months, the final call they can make even after 3 months or 6 months, depending on when the company wants the money. They can call it. Am I clear? So these are the stages in which the company makes a call. So I was discussing about authorized capital. Authorized capital is maximum that the ROC has given me permission, right? I am getting a permission of 1 lakh shares, but I don't want 1 lakh now. I want only 4 lakh. So I issued 40,000 shares at the rate of 10 each. Excuse me, guys. Okay. So I wanted only 4 lakhs, so I issued 40,000 shares at the rate of 10 each, right? But I'm not as famous as Infosys, so I got only 30,000 applications. So my subscribed capital was how much? 30,000 shares into 10 each. It is 3 lakh. Now, I don't want that entire 10 rupees now. I don't want that entire 10 rupees now. I called in stages. So if I made only application, my called up capital will be 30,000 into 2. If I have made application and allotment, that means I have called 5 rupees. So my called up capital will be 5 rupees. Assuming I called application and allotment. So it will be 30,000 shares at the rate of 5 each. I have called only 5 rupees. That means another 5 rupees I am yet to call. Am I clear? So it will be 1,50,000. But there are few shareholders who are not good, defaulters. I called from 30,000 shareholders. 500 shareholders don't want to pay me, or were not able to pay me actually. Okay, so I got out of 30,000 shares at the rate of 5 each. I was expecting an amount of 1,50,000, but there are defaulters. Less calls in area. 500 shareholders could not pay me. 500 shareholders could not pay me 3 rupees. 500 into 3. 1,500 rupees I could not get. This is my calls in area. So how much I got? I got only 148,500. This is the amount that will go in my. If I want to see my balance sheet, this is the amount it will go. 1,48,500. Note number 1 will be 1,48,500. Clear? That is the amount that will go in note number 1 and sit 1,48,500. Not all the amounts. See, I cannot tell my capital, right? I cannot tell my capital as 10 lakh plus 4 lakh plus 3 lakh plus 1,50,000. All these are only disclosures that I have to do in the share capital note. How much is my authorized capital? How much I issued? How much I was able to get the subscription? How much I called? what will be the final capital that will be disclosed in the balance sheet is only the paid up capital. All other capital will be only disclosures. We do a double underline. Whenever something is not totaled in the balance sheet, we do a double underline. Okay, so this will be shown as a double underline in the balance sheet. That means these items will not be taken for totaling. What will be taken for totaling is only the final amount. What is the paid up capital? Okay, I cannot tell my capital as 10 lakh, 14 lakh, 17 lakh, 18 lakh 50,000 plus 1 lakh 48,500. That is not my capital, right? Ultimately, what I got is only 1 lakh 48,500. So the ultimate capital only will be going in my balance sheet as paid up capital. But everything has to be disclosed. If you don't disclose this, you will not get marks. You have to start from authorized capital, then issued capital, then subscribed capital, then called up capital, and then paid up capital. Guys, I have only 3 on cam.
Sir, you put the defaulters as 500 into 3. Shouldn't it be 500 into 5?
I am assuming all these are examples, right? I am assuming, see, application, no one will make a default, right?
Okay. Yes, sir.
Okay, if you did not give me application, you are not a shareholder at all. So you can make a default only in the second call, right? So it's obvious that everyone would have paid application, right? Without application, we cannot admit in the college also, right? So a defaulter can only be who is already admitted in the college. Okay, all these are examples. Don't go by the numbers, actually, just stay with the logics. Numbers are only for demonstration and to make the concept clear, but numbers are not important or relevant at this point. Am I clear on the concepts, guys? So what is authorized capital? Anyone?
The maximum capital which a company can issue.
Company is authorized to issue.
Okay, yes.
Okay, absolutely right. Srimati, what is issued capital? Anyone can speak in any language, English or Tamil. Both languages are okay.
Offer for subscription.
Sorry?
Offer for subscription.
Offer part of it. There is no clarity in the answer. Deepa, what is subscribed issued capital?
The company will issue, I think so, for amount.
Okay, I think so is not an answer for my class. We have to be absolutely spot on. Okay, what did I tell about the issued capital? That is the expectation that the company has, or that is the requirement of the company. Issued capital is nothing but what the company expects to receive from the public, right? For today, they have a requirement of 4 lakhs. So how many shares they have to issue? 40,000 shares into 10. Clear? What is subscribed capital, Neha?
Subscribed capital is a capital that the people have subscribed for the company.
Yes, absolutely correct. Subscribed capital is the number of applications that we received, or number of shares that the company offered actually to the public. Clear? So subscribed capital is what, how much I can give to the public. That is what is called subscribed capital. Then come called up capital. Called up is 5 rupees I called. Out of 10 rupees, I have called up only 5 rupees. So my called up capital will be 30,000 shares into 5 each, 1.5 lakhs. But did I receive all the money? There are 500 shareholders who did not pay me the 2 rupees on allotment, or 3 rupees on allotment. Sorry, 500 shareholders, they did not pay me the 3 rupees on allotment. So out of 1,50,000, I was not able to get 1,500. It was 1,48,500. So 1,48,500. These numbers you can remove because it is not tallying at this stage. The balance sheet has to tally. Okay, so 1,48,500 will go into my notes as share capital. Whenever you mention, see in your exam you can get a question to present the share capital, because there are multiple things, multiple logics which are involved in presentation of share capital. Authorized capital, issued capital, subscribed capital, called up capital, paid up capital. They can test your knowledge on presentation of share capital. It can come as definitely for 11th and 12th it can come, but for foundation also, if they want to understand how in Schedule 3 of the Companies Act you are going to present share capital. They can test your knowledge on share capital itself as a 2 or 3 mark question. Am I clear? Any doubts so far?
No, sir.
Okay, good. So we have discussed about, so far what we have discussed is what is a share. Okay, what are the features of equity shares, and we discussed about the types of share capital. So far we have discussed only the main thing that we have discussed so far is only the types of share capital. Clear? Now let me go into the accounting entry of equity share capital. Okay, how to account when I get some amount from the public, how to account that money in my books of accounts. I will get into the accounting part of it, and every accounting entry that I will tell, I will make you recollect our discussion. What is the discussion that we had? Assets and expenses always have which balance, guys? Debit balance. When liability increases, what we shall do, Neha? Credit. When asset decreases, what we shall do, Shivanesh? Srimati, when
Debit.
asset decreases. Okay.
Debit.
Asset decreases.
Credit.
Credit. When liability increases.
Credit.
Credit. When asset increases.
Debit, sir.
Debit. Who was this? Who answered actually? Deepa, I think.
Sir?
Who answered me actually? All of the answers were correct.
Srimati.
Srimati, fantastic. Okay, that is the speed that I expect from you guys. I jumbled this time. Okay, so that is what I expect from you. So we will take the discussion. We'll take the journal entries now. Today's class is going to be on journal entries. We will again test our knowledge on application of those concepts as we discussed with journal entries. Am I clear, guys? First journal entry. Very simple. You can frame the journal entries yourself. See, I don't have to tell you. This is the first time you might be learning. Few of you might be learning this concept, but I can ensure you that you can make an attempt to try the journal entries. You'll be very happy that you are making journal entries without knowing the subject itself. Okay. First journal entry. When I make an application, when I ask for an application from the public gives me some amount. That amount is called as application money. First transaction will be receiving the application money from the public. What are the two things which happens in this transaction? Can anyone tell me? What are the two things that happens in this transaction? When I receive an application money, think about it. And see, I am a company, you are a shareholder. You are paying me application money. As a company, what I shall do? What will I get as a company?
We'll get cash.
We will get cash. Fantastic. So cash, immediately the moment you think that one of the item is cash, you should go into your 360-degree search should get started. What is that? We have only two categories: asset, expenses, liability, income, capital. Which category will come? Bank account. Which category?
Asset.
Asset. My asset is increasing or decreasing?
Increasing, sir.
Increasing.
So what I shall do? What is the debit that we shall do?
Bank
Cash.
account debit.
Yes, bank account debit or cash account debit. We will use bank account. We are doing the accounting for a company, right? The shareholder is not going to come and pay me in cash. Okay, so it will be bank account debit. Fantastic, guys. Absolutely impressive. So first entry on receipt of application money. So we are going to tell the accounting entries now. Accounting entries for share capital. As we discuss, it's important that you understand. At the same time, try to take the notes also as we discuss. See, something which is written by you in your own format stays longer with you. Okay, don't have this thing that, okay, at the end of the class, you will get the notes in Excel. Those things you will get, but that is not the way of learning. The learning is when you start recording your notes actually. Okay, and your note should be in such a way that is understandable to you. That is very important. So whatever I tell, I will be giving a lot of concepts. Few things I may not be there in any of the textbooks also. As we progress, it may not be there in any of the textbooks also. So whatever little things that I tell you as a concept, it's very important that you capture these concepts in the form of notes, which will be very, very important for you at the time of revision. So whatever rules I told you, right, the asset and expenses, you cannot find that in any textbook for that matter. You cannot find in the way that has been told to you. You cannot find that in any textbook. So it's very important that you capture notes. It will be very helpful for you in understanding those concepts. Am I clear? So first entry on receipt of the first transaction is receipt of application money. This is transaction number 1. So two things happen. One is I get money, and that money is towards application money, right? So first entry is bank account debit. Bank account debit. I will credit something called share application money. Bank account debit to share application. Assuming, okay, I will take this example. This is my example. This is how we are going to receive the money. I'm talking about, let us talk about 10,000 shares issued and subscribed. $10,000 shares at the rate of 10 each. Issued and subscribed 10,000 shares at the rate of 10 each. So I will get applications for, I will get how much I will get on application? 2 rupees. From how many shares? 10,000 shares. So 10,000 shares multiplied by 2, which will be equal to 20,000 rupees. This is my amount. This is my amount. So I am debiting bank account. The reason why I debited bank is Prasanna told it's an asset. Asset means increase in asset has to be debited. I credited share application money. Why I credited share application is, see, I am putting into a temporary account. I'm putting into a temporary account as a liability for today, because I don't know whether I'm going to allot to all the shareholders, right? I gave an example. I called 40,000 applications, but I got 1 lakh applications. Can I give it to everyone 1 lakh? I cannot give. So I am parking temporarily. I am taking it as a liability, right? So increase in liability at this stage into 2 rupees, 20,000. It is actually not a liability. It will be converted to capital. Next entry is transfer of this application money to capital. Transfer of application money to capital, to equity share capital. When I transfer this application money to capital, my capital will increase or decrease?
Increase.
When capital is, okay. See, I am calling shares from the public, and the public has given me money. Now I am transferring this money to capital. When I transfer this money to capital, my capital will increase or decrease? It will increase, right?
Increase.
Yes, the whole purpose of this issue of shares was to raise capital. I'm now raising capital. So whatever application I received, I'm going to transfer to capital. So when capital increases, what I shall do?
Credit.
Credit. Fantastic. So to equity share capital. To equity share capital. 10,000 shares into 2 is equal to 20,000. Okay. So I credited equity share capital, and I created a temporary account called share application. That account will become 0, because from that amount, I only park this amount temporarily actually. Until I transfer to capital, I put it in an account called share application money. Now I'm closing that account and transferring to capital, right? So entry will be share application account debit to share application account debit. So this application account will become 0, and my capital, ultimately, if you see, This is the first entry that we learned in our 11th standard. If you remove this two leg of the transaction, this is nothing but bank account debit to equity share capital. We learned the first entry, cash account debit to Ram's capital account. Ram started business with capital. Ram started business with capital. This is the same entry that we learned there. Cash account debit to Ram's capital account. Here also I'm doing the same, cash bank account debit to equity share capital. Clear? Am I clear? Neha is surprised. Why, Neha? Never thought from this perspective?
Yeah, sir, I didn't think this in this way.
Okay. See, it's accounting is all about debit and credit, right? We never deviate from the basics. Okay. So when ultimately what is happening in this transaction, my cash is increasing, my capital is increasing. There also what happens, my cash increases and capital increases. Okay, ultimate impact of this transaction is bank account debit to equity share capital. On one side, my bank account will increase, on the other side, my capital is increasing. Okay, first entry is bank account debit to share application money. Second entry is share application account debit to share equity share capital. Clear? So share application is debited, share application is credited. So this will become zero. Ultimate impact will be bank account debit to equity share capital. But these are the two entries that we have to pass. Transfer of first is application received, then transfer this application to equity share capital. Any doubt at this point? Anyone? Okay. Then the next entry. What is the next call, guys? Allotment. See, in case of application, first we will receive and then transfer. But in case of allotment, I know, right? I have identified my shareholders. I have identified. I know that there are 10,000 shareholders, and these 10,000 guys are going to pay me how much? 3 rupees they are going to pay me allotment. So after application, first I will pass a due entry for allotment due. What is a due entry for allotment? On allotment becoming due. Allotment becoming due. What is my expectation? Entry will be what? Share allotment account debit. I will create a temporary account, share allotment account debit to equity share capital. Share allotment account debit to equity share capital. 10,000 shares multiplied by 3 rupees. So how much I am expecting? How much I am expecting my capital? My capital will increase by 30,000. And how much I am expecting to come in allotment? 30,000 rupees. 30,000 rupees I am expecting to come in allotment. So I debited allotment account in the expectation that I will get 30,000 rupees. Clear? So application, first I will receive, then I will transfer to capital. From allotment call onwards, allotment, first call and final call, first entry will pass as due entry. What will be the due entry? Share allotment to share capital. For first call, share first call to share capital. Share second call, say share second call account debit to share capital. I am crediting my capital with the amount that I am expecting to receive. Clear? Any doubt? Okay. After making the allotment, how much my capital should be? My capital should become how much? My capital should become 5 rupees for 10,000 shares. So 10,000 into 5, 50,000 rupees should be my capital after allotment. Clear? So 20,000 I credited in application. Now 30,000 I'm going to credit in capital. So increase in capital. Again, the same logic. Increase in capital has to be created. Allotment is a temporary account. Okay, this will get cancelled the moment I receive the amount. Next entry will be on receipt of allotment money. Okay. When I receive this amount, what will be the two transactions, guys? Can anyone tell me what will be the two transactions when I receive allotment money? First, I will receive some cash, right? Entry will be same, bank account debit, and this cash is received towards what? Towards allotment, right? Because capital I have already created. Now I have to nullify this account, this allotment account I have to nullify. So entry will be bank account debit to share allotment. So this entry again reflects the same thing, same concept. Ultimate impact is bank account and equity share capital. Am I clear? So next entry is, sorry, bank account debit to share allotment. 30,000, 30,000. Again, if you remove allotment and allotment, this entry will remind you again bank account debit to Ram's capital account. Sorry, I removed bank account. I should remove allotment here and allotment here. This is nothing but bank account debit to equity share capital or Ram's capital account that will take that. Okay, all the entries will be like that. Only two impacts. Ultimate impact will be only to bank account and to capital. Clear? We will pass this entry in two stages. One is the due entry. The due entry will be what, guys? Share allotment to share capital. If it is first call, it will be share first call to share capital. If it is second call, it will be share second call to share capital. When I receive the amount, it will be bank account debit to share allotment. If it is first call, it will be bank account debit to share first call. If it is second call, it will be bank account debit to share second call. This completes my discussion on the basic entries for issue of capital. Okay, let us make two more calls. What is the next call? On first call becoming due. On first call becoming due. First call was how much, guys? First call was 3 rupees only. So I don't have to change the amount. So entry will be, instead of allotment, it will be share first call. Share first call account debit to share capital. And here it will be bank account debit to share first call. Amounts are the same. Share first call to share capital, bank account debit to share first call. Clear? Any doubt? Easy, tough? Are you able to understand? Not able to understand? All feedbacks are welcome. How many of you are able to follow me, guys? If you're able to follow, say yes. If you're not able to follow, say no in the text box. Yes means you are following me. No means you're not following me. Okay. Only 2 are following me. 4, 5, 6, 7, and 8. Okay. So I assume that your guys are following. Thank you guys for the confirmation. So on first call becoming due. Next is on final call becoming due. All of you are comfortable in English, right? I suppose everyone are comfortable in English, and my English is
Yes,
not as hi-fi or not in a question that you will not be able to understand. It's very simple English. I hope you are. I'm more comfortable in English than Tamil, so I will be taking my classes only. Fine. Okay. Final call becoming due. What is the entry, guys? 10,000 into 2. It will be 20,000. 20,000. Here, instead of first call, it will be what? Share. Final call. And here it will be bank account debit to share. Final call. 20,000 rupees. Here it will be 2 rupees and 2 rupees. In the entire chapter, have a habit of writing this in the left side. There is a reason you will get to know as we progress in the chapter. Always mention number of shares into call, number of shares into call. Have a habit actually, because as we progress, the entries are going to be a little more complicated. We will have one debit against 5-6 items which will be created. So it is very important that we understand the journal entries. Yeah, have a habit in exam also. You can put it. Nothing wrong in putting that in exam also. That shows your understanding of that concepts. Yeah, and every see, whenever we talk about journal entry, particularly at any level, a journal entry is not complete without a narration. So you should use the format date, particular, ledger folio, debit, and credit. The format, those who are not aware of the format, I will just mention it. The format should be date. I'm not going to use this format in all my classes, but this is the format: date, particular, ledger folio. Ledger folio will always remain blank. This is the format. If I want to write a proper journal entry, I have to write it in this way. date, particular amount will not be there. Ledger folio, debit and credit. So it will be 20,000. Ledger folio will be blank. This will be 20,000. This will be 20,000. And what is narration is very, very important part of the thing. Here it will be being. Narration always starts with being application money received from 10,000 shares at the rate of 2 per share. Whatever is the transaction, you have to just write it. That is called as narration. And if you don't write this, if all your journal entries are correct, and if you don't follow the format, be ready to lose 50% of your marks in any exams, whichever you are writing, whether it's your 11th or 12th or foundation exam, you will get only 50% of. If it is a 10-mark question, you will, if I am the examiner, I will give you only 5 marks, even if all the answer is correct. Clear? So whenever you are writing journal entry, please ensure the presentation is absolutely like that. I will not be following this because we are not taking 11th standard here. We are discussing foundation here. So for me, it is not important for you to tell you what format it is. Okay. So only for the first transaction, I'm telling you guys. Date. If the date is not there, you can mention serial number something, but have this column: date, particular, ledger folio, debit and credit. And this narration is very, very important. It's part of the journal entry. Ledger folio will always be black. Clear? Okay. I'm not going to repeat this, but whenever you are writing any test, please ensure that narration and format is on dot actually. Clear, guys? Good. So any doubt in the series of journal entry? So for application, we will first receive and then transfer to capital. Entry will be bank account debit to share application. Next will be share application to share capital. Other calls, I will first make a due entry, share allotment to share capital, share first call to share capital, share second call to share capital. Then I will receive it. Entry will be bank account debit to share first call, or bank account debit to share second call, or bank account debit to share capital. Clear, guys? These are the things that we have learned so far. Any doubt? Okay. Let me see if we can pick up any questions at this point. Okay. Okay. Let me introduce some new concepts to you. We will talk about discount on issue of shares and premium on issue of shares. What will be the accounting entry in case of discount? What will be the accounting entry in case there is a premium? Okay. Let me introduce a concept of what is the face value of shares always, guys?
10 rupees.
10 rupees. So even if the shares are issued at premium or discount, the face value of the shares are not going to change. Okay. So this is the face value. Face value is also called as
Nominal value.
Nominal value. So I will be using this term interchangeably. At times I will call it as face value. At times I will call it as nominal value. And I will, in the whole chapter, I will emphasize a lot on face value. Okay, there is a reason. As we go further in the chapter and we write journal entries, you will get to know what is the importance of face value. Okay, so when shares are issued at premium, that means a 10 rupees share I'm going to issue either at 11 rupees or 12 rupees. Right? If premium is 10%, it will be 11 rupees. If premium is 20%, it will be 12 rupees. If premium is 30%, it will be 13 rupees. Whatever it may be. Okay, so assuming in this case, there is a premium of 2 rupees. Premium. The premium of 2 rupees is on allotment. Okay, my total will become, my allotment will become 2 rupees. 5 rupees, sorry. My shares will be total 12 rupees. I will not call my shares as 12 rupees. I will call it as 10 plus 2 always. Always have a habit of calling this as 10 plus 2. Don't call it as 12 rupees. 10 rupees is face value and 2 rupees is premium. Okay. So if the shares are issued at a premium of 2 rupees, it is not a 12 rupee share, it is a 10 plus 2 rupee share. Why 10 plus 2? Because 10 will go to the face value or the share capital and 2 rupees will go to the premium account. We have to put 10 rupees to a different account, 2 rupees to a different account. That is why I will call it as 10 plus 2. Okay. Just don't call it as 12 rupees. That is point number 1. Okay. So this shares which are issued at premium. Okay. 10,000 shares of rupees 10 each. 10 each issued at 10% premium. Sorry, issued at 20% premium. So 10,000 shares of 10 each issued at 20% premium. That means my 10,000 rupees share of 10 rupees, 10 into 20% is 2 rupees, right? The premium is 2 rupees. So I'm issuing at 2 rupees premium. So my share will now become 10 plus 2. And this premium is there on allotment call. Okay. So my share is 10 rupees plus 2 rupees. This is how I'm going to call. On application, I will get 2 rupees. Allotment, I will get 3 plus 2. I will not get 5 rupees. I will get 3 plus 2. 3 will go to capital. 2 rupees will go to premium. Am I clear? In first call, I will get 3 rupees, which will go to capital. And final call, I will get 2 rupees, which will go to capital. That is why I'm segregating between 3 plus 2. 3 rupees. So only 10 rupees can go to capital. 12 rupees will not go to capital. 10 rupees will go to capital and 2 rupees will go to securities premium account. 2 rupees will go to securities premium account. Am I clear? Am I clear, guys? So if I want to write the journal entries, it's not going to be anything different except for allotment, because the premium is there on allotment, right? Except allotment, all my journal entries are going to be same. I will tell you what is a different entry that we are going to pass in allotment. I just copied from the last page all my entries. All the entries are going to be same. Only allotment will be different because allotment is having a premium. Okay. So how many shares? 10,000 shares. In 10,000 shares, I have to get 3 rupees in capital and 2 rupees of premium during the call allotment. I'm discussing only allotment call because all other calls are same. Okay. So out of 10,000 rupees, I'm going to get 3 rupees of capital. On 10,000 shares, I'm going to get 3 rupees of capital and 2 rupees of premium. In allotment, first entry I pass is due entry or receipt entry. Which entry I pass first? Which entry I pass first in allotment? Due entry or receipt entry?
Due entry.
Due entry. So my due entry in allotment was share allotment account debit to share. I will remove these numbers. In allotment, how much I am expecting to receive? 3 rupees of capital plus 2 rupees of premium. The total amount that I am expecting to receive is 5 rupees. Am I clear? So 10,000 into 5, 50,000 rupees I am expecting to receive. Whether out of this 50,000 entire rupees is premium or entire rupees is capital, or there is a split of capital and premium.
Split of
There's a
capital.
split in capital and premium.
How much is capital?
3,000 into
30,000.
So 10,000 shares. I'm talking about 10,000 shares and 3 rupees will go to capital. So 10,000. Where is my entry? 10,000 into 3 rupees will go to capital. Remaining amount, what did I tell you? What is the remaining amount, guys?
Security premium.
Securities premium. Fantastic. Securities premium will come under the heading of reserves and surplus. I showed you the balance sheet, right? I showed you the balance sheet, reserves and surplus. It will not go into share capital. It will go into this heading of reserves and surplus. It will go into note number 2. Securities premium will go in the heading of reserves and surplus. Capital will go under share capital heading. Securities premium will go under the heading of reserves and surplus. Am I clear? Clear? Fine. So let us go into the entry. So 10,000 into 3, my journal entry is not balancing. Why? Because I have 2 rupees of securities premium. 2 securities premium account, which is equal to 2 rupees. Okay, guys. Now, next entry. When I receive this amount, I will get 30,000, 20,000 or 50,000. How much I will get in allotment? 20,000, 30,000, 50,000. How much I will get? See this, guys. How much I will get in allotment?
50,000, sir.
50,000. Yes, you will call including the premium, right? So in my bank account, I will get 50,000. So entry will be 10,000 into 5. 10,000 into 5. My bank account debit to share allotment will be 50,000. 50,000. All other entries will remain the same. This is the only change when it comes to on allotment become due. This is a case of shares issued at premium. It can be in any call. Premium can be in any call, not necessarily in allotment. If it is in first call, same thing we will follow. Share first call account debit to share capital to securities premium. Then bank account debit to share first call. Clear? 99% of the question, it will always be in allotment in for academic purposes. 99% of the question, it will always be in allotment only. Clear? Any doubt?
Sir, so I will not show the securities premium on receipt of allotment, right, sir?
Absolutely, I will show. My bank account is including securities premium. My bank account, this 50,000 is including securities premium. Okay. Why I will not show? Because already I have credited securities premium, right? Why do you have to credit it again?
Okay, sir.
Already when I credited capital, did I credit again capital? I did not. I used a parking account called allotment. So my entry will be bank account debit to share allotment. That amount will include both capital and premium.
Okay, yes, right, sir. Okay.
Okay. Good. Get it clarified, guys. Whatever doubts, small, big, silly, or important, or whatever it is, right? Get it clarified in the classes. Speak out. Until you speak out, I will not be able to understand. At my end, I try to ensure that you should not be left with any 1% of doubt also. In spite of that effort, if you have a doubt, feel free to speak out. Because until you speak out, I will not be able to analyze. If it is a face-to-face class, I can read the face and tell you. I can only read 5 faces now. I can tell who has understood and who has not understood. For the remaining person, you have to ask doubts. That is the only reason that I ask you to turn on the camera. By looking at the camera, I get to know what is your understanding level of this concept. Am I clear, guys? Srimati, there is no reaction in your face. Are you able to understand or not able to? This is how at times Neha used to be actually previously. Now I can. In the first few classes, not today, initially in the previous classes. Srimati, are you able to follow me?
Sir.
Yes? Okay. Any doubts so far? We'll move to the next concept of discount. Okay. Again, very simple. When I give my shares at discount, okay, I'll break this into 2. 3 non-shares. Okay, let me again go to that sheet, securities premium. Why I created security? See, instead of 10 rupees, I'm getting 12 rupees. Why I created securities premium? In the second part of the table, if you remember the last class, we had income, liability, capital, and reserves, right? The securities premium comes in the reserve part of it, guys. Securities premium comes in the reserve part of it. When I issue a share for 12 rupees, extra 2 rupees I'm getting, right? This extra 2 rupees is actually my profit. That profit will be going into reserves and surplus. It will be going into securities premium. Securities premium is nothing but a kind of reserves or surplus that I'm getting actually. I'm putting it in under the heading of reserves and surplus. Am I clear? Increase in reserves has to be credited. That is the concept. No one asked me. Okay, that is the reason why I debited. Any doubt? Okay, now coming to discount on issue of shares. Okay, now I will give the discount 10,000 shares of rupees 10 each, issued at 10% discount. Okay, issued at 10% discount. That means my share is 10 rupees less discount. 10% discount is 1 rupee. So my share will be 10 minus 1. I will call it as 10 minus 1. I will not call it as 9 rupees. I will call it as 10 minus 1. Am I clear? So here it will be 3 rupees and discount will be 1 rupee. So my share will be 3 minus 1. It will be 9 rupees. So I will not call it as 9 rupee. I will call it as 10 minus 1. Purposely 10 minus 1. Because 10 rupees will go to capital and 1 rupee will go to discount. Clear? Never change this logic, guys. Always call it as 10 minus 1 or 10 plus 2. 10 plus 2 in case of premium or 10 plus 3 in case of premium, whatever is the premium amount. And in case of discount, it should be 10 minus 1 or 10 minus 2, whatever the case may be. Am I clear? Clear so far? All entries are going to remain the same. You will directly go to discount is there in which call? I have given again in allotment. Okay. So I will directly go to the allotment when shares are issued at discount. It can be in any call. I can give the discount in any call, but assuming 99% of the academic questions will be only on allotment. Discount will be, I've never seen a question discount being given in any other call also for academic purposes. Clear? Yes. So discount will be in all allotment. So what entry? Okay. So let me remove this. On 10,000 shares, I was supposed to get 3 rupees. I was supposed to get 3 rupees, but if I give 1 rupee discount, how much I will get on allotment is? On allotment, how much I will get? Only 2 rupees. I will, instead of 3 rupees, I will get 2 rupees because 1 rupees I have given discount. Clear? What is the entry? Basic entry will always remain the same. Share allotment to share capital. Basic entry will not change. So let us write the basic entry first. What was the basic entry, guys? Share allotment to equity share capital. In allotment, in equity share capital, everyone knows, right? My equity share capital will be how much in equity share capital? How much I will put in equity share capital?
30,000.
Yes. 3 rupees is my equity share capital. So 10,000 multiplied by 3 rupees will go to my equity share capital. Will I get this 30,000 or will I get lesser amount?
20,000 will get.
I will get 10,000 multiplied by 2. I will get only 20,000 rupees. The difference of 1 rupee, 10,000 into 1 is a discount. Discount will come under which category? 2 buckets, debit side and credit side. In the debit side, we have, in the left hand side, we had asset and expenses. In the right hand side, we had income, liability, and capital. When I give a discount, I am a company, I am giving discount to my shareholder. This will be an asset or income or expense or liability. What it will be?
It's an expense.
It's an expense. Increase in expenses should be
Debited.
Debited. So what I will debit? Discount on issue of shares. discount on issue of shares. Clear? We will never deviate from that class actually, and I will keep reminding those things in our entire discussion. Discount on issue of shares will be 10,000 into 1. Now, any doubt why I debited discount, guys? Why I debited discount is because it's an expense for the company. The company is not going to get this money. It's an discount allowed. If you remember final accounts of sole proprietorship, discount allowed was debited to the profit and loss account. Clear? Same concept. Discount given to the shareholders, it's an expense for the company. I'm debiting it. Any doubt? Increase in expenses has to be debited. So now bank account debit to share allotment. How much I will get, guys? In share allotment, how much is the amount? Share allotment, how much is the amount that I'm supposed to get? 20,000. I will get only 20,000. So bank account debit to share allotment will be, assuming everyone is a good shareholder and paying me. I'm assuming, taking an assumption that everyone pays me 20,000. We will come to the complicated cases later. When someone will default or someone will not pay, we'll discuss later. For now, we are assuming everyone is going to pay. Any doubt? This is when shares are issued at a discount. So when shares are issued at a premium, entry will be, basic entry will remain the same. What is the basic entry? Allotment, share allotment to share capital. If premium is coming, premium is an income or expense? Or rather it's a reserve. 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 Increase in reserve has to be credited. So what was the entry? Share allotment account debit to share capital to securities premium. In case of discount, discount is an expense. Increase in expense has to be debited or credited?
Debited.
Basic entry will remain the same. Always freeze the basic entry in your mind. Share allotment to share capital is the basic entry. Only one more element will come is discount. Debit the discount. Share allotment account debit. Discount on issue of shares account debit to share capital. Am I clear? How many of you understood this concept of discount and premium? Sivanesh.
சார் எனக்கு வந்துட்டு லைக் முழுசா புரியல சார்.
Okay. No problem.
புரிஞ்சு புரியாத மாதிரி இருக்கு.
No issues. Which part you are not able to understand?
லைக் கண்டினியூட்டியா புரிய மாட்டேங்குது சார். அதனால எனக்கு which part நான் எதுவும் இது பண்ணி சொல்ல முடியாது.
Okay. Discount expense, it has to be debited. Adu purinjudha?
Yes sir.
Premium is a reserve that has to be credited. Were you able to understand that?
Yes sir.
Okay.
Discount or credit என்ற ஐடென்டிஃபை பண்றது புரியுது சார்.
Okay. That is
மத்தபடி
okay. That is good for today's understanding. What I will suggest is go through the entries that I have told you.
Okay sir.
3 cases we have told you, right? One is without premium, without discount. Another is with premium. Another is with discount. I will share this sheet by end of the class in the WhatsApp group.
Okay sir.
You can download that sheet, go through the entries. In case you have a doubt, please ask me. And wherever you are having a doubt, particularly this in fact, everyone who is listening this term discount, premium and all for the first time, mention the reason also. I'm not, see, we are in a professional course now. I'm taking very basic because I have students of 11th also here. And I'm sure 99% of the students who are in foundation, they don't know the basics actually. That is my personal experience. So far, the students I have dealt actually. In fact, I take the first class that I have taken, I take that class for my inter students also. Because those who have not studied inter or those who have not been associated with us, 99% of the students those who have cleared foundation, I hardly see the basic understanding with them actually when I take the inter classes also. So my first class always remains the same irrespective of what batch I take actually. So it's very important that students should understand the logic. They should understand the treatment. So my inter class also starts with the same class that I'm taking for you. And sometimes the inter guys think actually why it is so elementary, because 99% of my inter class student also I have seen that they don't have the understanding of debit and credit. It's very important that we build that understanding. And if you see any of my 11th and 12th standard students, I can clearly say that my 11th standard student also will be able to understand what's a debit and credit. Any student you ask them, they will never make a mistake in those debits and credits. So it's very important that you understand it. So Sivanesh, for you, my advice will be go through all the 3 sheets.
Okay, sir.
Understand the journal entry with logic. Capture the logic also, because you are understanding this for the first time. Discount why I debited. Open, always have the front sheet. In fact, all of you guys who are not clear on debit and credit at this point of time, put that in front of your study table. Asset and expenses increase means debit. Asset and expenses decrease means credit. The 2 rules, that is enough. You will never make a mistake until it is clear. In another 2 weeks time, you all will be comfortable with this logics. Any doubt?
No, sir.
Okay. Fine. So take it down, guys. In the next 5 minutes or 10 minutes, I'm only going to recap what has been learned so far. I will wind up the class at 8:30. Okay. Any doubt in the concept so far? So what we have covered so far is first understanding of what is equity share capital. Then we discussed about the types of share capital: authorized, issued, subscribed, called up, paid up. And then we discussed about 3 cases of entries. We discussed about when shares are issued at par, we call it as at par, at premium, at discount. When the shares are a 10 rupee share is issued at 10 rupees, we call it as shares are issued at par. If it is issued at premium, or it is called as shares issued at premium, and another case is issued at discount. Clear? Securities premium will come under which category, guys? In Schedule 3 of the Companies Act.
Surplus and reserves.
Reserves and surplus. Fantastic. Reserves and surplus increase means what we shall do?
Credited.
Credited. Discount on issue of shares will come under which heading? In the
Expense.
5 buckets that it will be an expense. Increase in expenses has to be
Debited.
debited. So let us recollect the entry for discount and premium again, since Shivanesh did not understand. When the basic entry is share allotment account debit to share capital. This is clear? Share allotment account debit to share capital. Now, if I am issuing shares at premium, I will receive 3 rupees or I will receive 5 rupees. When I am issuing shares at premium, the company will receive 3 rupees in allotment or 5 rupees in allotment.
3 rupees.
I'm talking about allotment call. 3 rupees is allotment, 2 rupees is premium. Okay, so when I'm issuing shares at premium, what is the breakup of this? 3 rupees allotment and 2 rupees premium. So in my allotment call, I will receive 5 rupees or 3 rupees. I will receive 5 rupees, right? So debit share allotment by 10,000 into 5. Share allotment by 10,000 into 5. My capital will be 3 rupees or 5 rupees.
3 rupees.
3 rupees, because it is 3 plus 2. I was repeating it. It is 3 plus 2. My shares are 10 plus 2. My allotment call is 3 plus 2. So in my capital, it will be 10,000 into 3 will go into capital, and 10,000 into 2 rupees will go to securities premium. When I receive this amount, next entry is bank account debit to share allotment. When I receive this amount, bank account debit to share allotment, how much I will receive? 30,000 or 50,000?
50,000.
50,000, because my 50,000. So entry in bank account debit to share allotment will be 50,000. Clear? Now apply this logic to discount also. Basic entry for discount, basic entry for allotment will remain the same. What is the basic entry, guys? Share allotment to share capital. That is the basic entry. Keep in mind, whether it is allotment first, the basic entry is always going to remain the same. Allotment to capital, first call to capital, final call to share capital. That will not change. Now I have to introduce a concept called discount in this. Okay, my allotment was 3 rupees. If I give 1 rupee discount, how much I will receive in allotment? 3 rupees or 2 rupees? 2 rupees. So my share allotment will be
2 rupees.
Share allotment will be 10,000 into 2. Discount, you all agreed with me that discount is an expense. When expenses are increasing, what we shall do?
Debit.
So debit, discount on issue of shares, debit. In my capital account, I told you my capital will always be with the face value. My face value in this question is how much? It is 3 minus 1. Right? So my allotment is 3 minus 1. So my face value, component of face value is how much? 3 rupees. So how much will go to capital? 3 rupees. So 20,000 rupees debit allotment, 10,000 rupees debit discount, and 30,000 rupees will go to capital. It is 3 minus 1. It is not 2 rupees. It is 3 minus 1. Am I clear? My share is 10 minus 1. My total value of the share is 10 minus 1. In case of premium, it was 10 plus 2. Because 10 rupees will go to capital, 2 rupees will go to premium. In case of 10 minus 1, 10 rupees will go to capital and 1 rupees will go to discount. Am I clear? So my capital can never change. In all the 3 cases, my capital will be 10 rupees only. In all the 3 cases, if you remember one, if you could see the linking in all the 3, the capital in all the 3 cases was 10 rupees only. Am I clear? That is why I was emphasizing this nominal value and the face value plays a very, very important role in this entire chapter. If you're clear on the concept of 10 plus 2 and 10 minus 1, you will never make a mistake. Am I clear, guys? Srimati?
Yes, sir.
Is it clear? Om Prasad. Who else is there? The faces I cannot see. I'm not calling their names. Aisha Sara. Is it clear?
Yes, sir.
Adavan?
Yes, sir.
Okay. Why your camera is off, Adavan? Okay. Next time, no sorry. You can Paytm me 500 rupees. Okay. For every camera that is off, feel free to Paytm me, guys. At the end of the class, once we accumulate some amount in my reserves and surplus, we can party with that. Okay. I will not, don't worry, I will not spend that. I will put it in my reserves and surplus. We can use that at the end of the session. Fine. Choice is yours. Okay. Any doubt? Good, guys. So with this, we will wind up for today. Okay. Assuming there are no doubts, we'll wind up here. In case you have doubt, before I start the next class, ask me the doubt. I will clarify the doubt, then I will proceed for further discussion of that. Okay. I will mail you the notes and whatever. See, I spent 2 hours in discussion. If you just open this tomorrow for 15 minutes or half an hour, you will not take more than half an hour to revise it. Okay, so if I'm spending 2 hours in this class, today's discussion can be summed up in half an hour. But in other classes, it may be like if I spend 2 hours, you may have to spend 1 hour or 1.5 hours to understand that, how to put that into practice. Okay, do that simultaneously on the next day itself and all related questions. See, we will be trying to cover study material and taxman. 2 books I follow actually, study material and taxman. Few portions I will be taking from study material, few portions I will be taking from taxman. But as a student, your duty will be anything which is discussed, that topic, you have to cover from all sources, guys. By the time we complete the chapter, you should complete the chapter from all sources. It can be RTP. RTP is for revision test papers. There can be some suggested answers. There can be MTP. So whatever institute material that is available for download all those materials, and you will be, I can ensure you that in exam, you will not find a single concept which is not discussed in the class. You will definitely find a question which is not discussed in the class, but not a single question concept, because the CA level at foundation, I don't think you will get a single question also which may not be discussed in the class. In fact, in any level for that matter, because what we have to do is we have to stay with the concepts. If you are clear on the concept, see, in case of today, it is 10,000 shares. If I change it to 20,000 shares, if I change the premium from 2 rupees to 1 rupees, that is the kind of changes that they can do in the exam. Right? They cannot manufacture a new question. All the concepts will be discussed in the class. You will not come across a single concept which has not been discussed in the class, that we can promise you as an institute. So stay very, very focused on the concepts. Variety of problems you have to practice with. See, here in our class, it is not possible to do everything, to be very honest. We can start with moderate problems and we can go to tough level problems actually. That is our scope actually. Initially, it will be easy question. As you progress, it will be a tougher questions actually. So we will take you through all the levels, but variety of problems, it is very important if you guys have to clear in the first attempt. Okay, it's very important that your practice has to be very disciplined. Very, very disciplined actually. And you are in a course like CA Foundation or CMA Foundation, which requires a lot of discipline actually. Okay. In fact, all of you, those who were associated with me in the previous batch, all of you are potential students which we see could clear in the first attempt. And what I have analyzed in this current batch also is we have a set of students who can definitely clear in the first batch actually. That is my analysis. So ensure that you put the required effort that is required for you to clear. Okay. So because our duty is only 40 to 50% is what we can put efforts actually. 200% effort is what you have to do. Because I cannot write exams for you, or Lakshmi Madam or any of the faculties cannot write. It's you who has to write. So it's very important that you put the required efforts from day one. Am I clear, guys? And have the targets very set actually. Don't target for 200. You will never get 200. I keep saying this to all my students. If you target for 200 in a professional exam, you will never reach 200. Okay. Our target and our study should be in such a way that we should not target anything less than 320. 320 is a very good score in CA. 320 to 350. Okay. So those who think that they can target 350 or 320, please set that as the target for this. Don't settle for anything less than 320. At least put all efforts actually to get that 320 or 350. If after putting the effort, if we end up at 280 or 240 or 250 or 260, let us accept that. Not a problem. We will improve that during intern. But if you set your target only as 250 or 240 or 200, then we will not be able to meet the 200 targets. Am I clear? So set your targets. Make your preparation in such a way, leave no stone unturned actually. When I tell no stone unturned means you have to put all efforts. I will stop presenting at this so that I can see a few faces. Okay. So when I talk about efforts actually, see there are two things actually. See, we have seen, to be very honest, in our we have been in this profession for almost 5 years now as a full-time professional. We have seen many failures, we have seen many successes also. Okay, it's not that all our students have passed, it's not that all our students have failed also. So we have seen both sides actually. There are many students who have failed, there are many students who have passed actually. In one attempt, one student has scored very, very ordinary marks. In the same attempt, one student has scored as good as 316, 318 or 280 also. Same batch students. What could be the potential difference between the two set of students? Only the discipline and hard work. Because whatever we are imparting, it's not different, right, for the two different set of students. Whatever we are imparting as a faculty is the same actually. So the only thing that can differentiate between those two things is the efforts that you put towards that actually. Okay, so why I am telling today in the first class itself all these things is it's very important. Now we have only 3.5 months with us. Every day is counting. So make those who are writing in May 2022, ensure that from today onwards, whatever faculties have given you the thing, study in the same day, and minimum 4 hours consistently if you are able to give for the next 2 months. And in the last 2 months, if you are able to give 6 hours per day, I can ensure you that you will be nowhere less than 300 in your score. Okay. Can we all do this? Those who are writing in May 2022. How many of you are writing in May 2022, guys? Okay. Can you put yes, May 2022? So that I can see how many of you are May 2022 students here. Neha is writing. Who else? Can you put yes, guys? Prasanna, when are you writing?
May 2023, sir.
2023. You have time. Actually.
Yes,
Okay.
after
So
12th.
Neha and Aisha. Who else is writing? Okay. Only the two of you. Okay. For others, be as disciplined as you can be. Ensure that our first attempt is our last attempt. Okay. So have your preparation in such a way. And Neha and Aisha, we see you as potential students who can definitely clear in the first attempt. So whatever you have doubts from the previous session, see, we tell our students to take as many classes as they want actually. If Prasanna is telling that his attempt is in May 2023, our classes will be open till May 2023 actually. We don't make the students actually once they have come to us, they can take till their attempt actually. In case for some reason they are not able to clear, they can continue after the attempt also. But we should not see that as a thing. Our thing is whenever we are writing, we have to clear it. That should be the only objective. If you're writing in May 2023, you have to clear. If you're writing in May 2022, you have to clear. There is nothing called November 2022 for the guys who are writing in May 2020. Am I clear, guys? So go with only one objective of clearing the exam in the first attempt. That is why you can. That is when you can become the youngest chartered accountants of the company, of the country, I would say. So target to clear it by 21 or 22. Life will be totally different once you do that. Am I clear, guys? Okay.
Sure.
Yeah, it was very important for me to set the context in the first class so that the next 3 months you use it very productively. Thank you so much. I will meet you in the next class.
Thank you, sir.
Thank
Thank
you.
you, sir.
Thank you, sir.
Thank you, guys.